Buying a vehicle is by far the worst investment you could ever make. From the moment you drive it off the lot, you're losing money. In this video, I'll be going over the exact formula that I use to buy a truck that will in turn make you money, not lose it. First, let's break down why buying a car is a bad investment. If you finance the car purchase with a loan, you'll likely pay interest on the borrowed amount. Over the life of the loan, these interest payments can significantly increase the total cost of the actual car, making it even less of a worthwhile investment. Beyond the initial purchase price, owning a car comes with ongoing expenses like fuel, maintenance, repairs, and parking fees. These costs can vary depending on factors like fuel efficiency, vehicle reliability, and local conditions, but they all contribute to the overall expense of car ownership. Additionally, cars lose money quickly over time, especially in the first few years. Once you drive a new car off the lot, its value can drop by thousands of dollars instantly. This means you're losing money just by owning the car. Now let's talk about how to avoid depreciation, operating expenses, and paying interest to the bank. Now, in order to do this properly, it does take a little bit of time. However, once you have properly set up this system, you can use it for your whole life, for every car purchase, for the remainder of your life. Before we jump into it, there are a few key points that we need to go over so the full overarching plan will make sense and work. First, you purchase a whole life insurance policy. This policy has a cash value component which grows over time as you pay premium. As you pay premiums, a portion of the money goes into a cash value account of your actual policy. This cash value grows over time. Once your cash value has accumulated, you can borrow money from the insurance company using that cash value as collateral. This is essentially a loan from your own policy. Now, when you borrow from your policy, you pay interest on the loan, which goes back into your policy. You have the flexibility to repay the loan on your own terms, but it's important to repay it to keep the policy in good standing. The idea behind this is to use the borrowed money for purchases. The benefits include tax advantages, potential growth of the actual cash value, and the ability to access the funds without going through the traditional lender route. This is step one. Step two is to buy a duplex. I know this sounds like a lot, but stay with me. I bought a duplex for $280,000. That duplex produces a free cash flow of $1,480 a month. That free cash flow I then use to pay back the whole life policy. Now, by doing these two things, you have literally become your own bank. You're no longer entrapped by it, and you're paying money back to your policy on your own terms. Now, you might be thinking, this is great, but how does the purchase of said vehicle make you money? Let's break that down. Now, if you don't care about the math and how this shakes out, this would be a good time to skip ahead to the end result free truck chapter. So I bought a Ram 1500 2020 for just shy of $40,000. To make things simple, we'll use $40,000 as our number. Your insurance policy loan rate will vary when you lock it in. Mine is right around 5%. When you borrow money from your policy, it's like a full balance is still there, tacked to the S&P 500. The S&P 500 grows on average approximately 8% per year, just to be conservative. So while you use that cash balance from the policy to buy a truck, it's still growing at 8% on average within the actual policy. 8% per year on $40,000 would be on average $3,200 that the policy will grow on average, once again, per year. You still have to pay back the principal and interest on the money you borrowed, and principal and interest for this will be about $754.85 a month over a 5-year term. $754 a month is about $9,058 a year. Once again, your policy is growing on average $3,200 a year. So that brings your total out-of-pocket liability down to $5,858. So this $40,000 truck is gonna cost you $5,858 a year. You might be thinking, that's great, but that's not free. So on top of that expense, you also have the maintenance and repair costs. According to Edmunds, on average, maintenance, depreciation, and repair costs for a 2020 Ram 1500 is $3,978 a year. That brings your total out-of-pocket liability to $9,836 a year. Now you might be thinking once again, all right, this is great, but we're headed in the wrong direction. Not free. Step 2 of this process was to purchase a duplex. My duplex, as previously mentioned, produces a cash flow of $17,832 a year. So that duplex income minus our cost gives us a net positive of $7,996, making this truck not only free, but you also get some above and beyond that. You could use that extra income to go pay the loan down faster, or to treat your loved one out to a nice dinner a couple of times a week, or even do both. Also, after that loan is paid off, 5 years or sooner, you'll have a fully paid off policy that you can use again and again and again for a new truck, and the property is still paying above and beyond that. So once the truck's paid off, you have a truck and you have a property that's paying you $1,486 a month, versus paying tens of thousands of dollars to the bank and losing tens of thousands of dollars from depreciation, interest, maintenance, and repairs. Take this example that I previously mentioned and go to the traditional route. In March, based on MarketWatch, the average interest rate for a used car in New Hampshire was 10.55%. At that rate, your principal and interest would be $861 a month, or $10,332 a year. Your maintenance, depreciation, and repair costs would be an additional, like we said, $3,978. That gives you a total out of pocket of $14,310 a year. That means that your $40,000 truck is actually $71,550 that you paid over that 5-year stretch. I know this is not an immediate remedy for making car buying less of a financial burden. My main goal of this video was to provide an alternative option from traditional bank lending that wouldn't derail you from accumulating wealth while buying a car. Just do the math. $71,550 versus nothing. Net positive $7,000 and change. So with that being said, thank you so much for watching. I hope you got something out of this video. Please like and subscribe. I'm looking to get to 100,000 subscribers by 12/31 of 2024. If I hit that goal, I'm gonna be donating the full month of December's YouTube proceeds to the American Cancer Society. So make sure you go ahead and like, subscribe, share with your friends and families, and go ahead and check out one of my other videos over here.